Hey, what's up, guys? I'm Cody the Coin Raptor, and in this video, I want to go over the indicators and factors that influence this massive 40% move up for Bitcoin. But before we get to that, be sure to smash that subscribe button to see my latest content. My channel has just hit 100 subs, and I want to thank you all for viewing. So, Bitcoin has gone on a pretty monster rally to start the year, about 40% or so. And I wanted to go back and do a quick deep dive and re-examine some of the factors and some of the indicators that led up to this performance. And so I'm going to go through some of the things that I saw ahead of time preceding this rally, and then I'm also going to talk about some things that happened during the rally to also push it much higher. So with Bitcoin, one of the most important factors to consider is the fact that Bitcoin had been largely oversold for some time. Now, it did recover under the RSI, as you can see here at the bottom. This is the daily. But it had a really hard time breaking out above this 48 level, and then once it finally broke out above that 48 level, it went off to the stratosphere in this case. So the RSI was depressed. It had remained depressed for some time. In fact, all the way back into the November crash that we had here. But then we saw a pretty significant recovery through the preceding months. All right. Now, the next thing I want to talk about is the dollar index. So as I've said before on this channel, the dollar index works inversely to Bitcoin. And the reason for that is because the dollar index measures the strength of the dollar versus other currencies. So what we have here is in a strong dollar environment, Bitcoin tends to suffer. And as you take a look at the dollar index here, you can see that the entirety of last year, the dollar index did nothing but move up. And then something changed, and that thing that changed was around in November. The dollar index finally started losing strength and finally started capitulating heavily. And as you can see here, it went down massively. Now, I said before that this correlates inversely with the Bitcoin price. So as the dollar index moves down, you expect that Bitcoin is also going to move up, right? Inversely correlated. And that didn't happen. That didn't happen for the longest time, because as we see here, around November or so, we had the big crash for Bitcoin, and then it continued to fall or stay sideways at about December. The only thing that changed was around January, when you started to see a large increase in the Bitcoin price. But all of that should have been reflected. This huge drop here in the dollar index, that should have been reflected in the Bitcoin price. It just wasn't. So that is one of the important factors that led up to such a large increase in the Bitcoin price. Now, additionally, there is the funding rate. And so we're going to talk about the funding rate. I did a whole video on this when it actually happened. I noticed that there is a massive increase in the positive funding rate for one of these days. It was the 7th of January. The 7th of January, one I have right here, had the largest spike in the funding rate since 2021, right? I made a whole video about it. I said traders have not been this bullish since 2021, because this level we hadn't seen since November of 2021 during the bull run upwards. Now, what this means is that traders were long, and they were long very strongly. They were strongly to the degree that we hadn't seen since 2021. This was kind of like a sort of predictive indicator to this massive run up that we had here. And these traders, either due to sheer force of momentum or a combination of factors, which I'll get to later, drove up the price dramatically. Okay, so in the future, when we take a look at this funding rate and we see something that is massively high like this, that would be an indicator that we're going to see some pretty huge moves. Now, to the upside, to the downside, not 100% sure, but in this case, it happened to be entirely to the upside. And just as a reminder, the reason why we like to talk about funding rate here is because we talk about perpetual contracts, and that gives us an idea of the sentiment around Bitcoin. In this case, it was extremely, extremely bullish, and the price has reflected that insane amount of buying pressure here. Next, we're also going to go ahead and take a look at some of the important network data, including the hash rate. So I've talked about the hash rate here several times, but the hash rate is the total hash rate of the Bitcoin blockchain. It is a good indicator for the measure of strength of miners. And so as more mining rigs come online, we tend to see an increase in the hash rate, and we tend to see it also correlate heavily with the price as well. So what happened was we'd seen that in December of about December 27th or so, we had kind of a bottoming here of this hash rate. And then over the next couple of days and the next couple of weeks, we see a massive increase to the hash rate. And so that signifies that the miners had recovered. And not only did they recover, but they pushed it to a new all-time high completely. Okay, so this is pretty bullish. Whenever you see the hash rate hit a new all-time high, that is definitely a bullish factor, because what that means is that miners are healthy, miners are not capitulating, and they are not adding selling pressure to the Bitcoin price. So over the last couple of weeks or so, miners have not been selling much. They have actually increased their position. They have been healthier, and you can see that by looking at the amount of the huge amount of the hash rate that increased through the last year or so, and especially over the last couple of weeks. All right, so miners have recovered in a big way. Next, another major contributing factor here was the shorts. Okay, so Bitcoin shorts got completely blown up. We go over here and take a look at CoinGlass's total liquidations, and we can see that over the last couple of weeks, massive amounts of Bitcoin shorts have been liquidated. In some cases, 79 million, in some cases, 72 million, and all the way up to $141 million worth of Bitcoin short liquidations happening in a very small amount of time. And so what happens when that occurs is that you tend to get a short squeeze, and that short squeeze tends to push the Bitcoin price higher as these shorts have to buy to cover. So that also leads to a pretty big increase in the Bitcoin price as well. Now, along that same line, I also want to go ahead and talk about the whales and whale activity for Bitcoin. So if we go back here and we take a look at the minute, we go all the way back here and take a look at the minutes for Bitcoin, we can see that whales and whale buys have pushed up the price pretty dramatically. I've gone over this a couple of times, but even just in one instance of just today, we can see a 300 Bitcoin buy in that 1 minute. And so buys like this have pushed up the price pretty dramatically. So whales have stepped in, and they've also pushed up the price. We can see here, this one's 425 Bitcoin for this 1 minute time frame. Massive buys from whales, and those whales have pushed the price up dramatically. Next, I want to go ahead and also talk about some of the factors that aren't specifically Bitcoin related, and that is the CPI, right? We've talked about the CPI before, but the reason why the CPI is important is because if the CPI comes in lower than expected, that is traditionally seen as a bullish move, and you'll see the indexes rise, and you'll see growth stocks rise, and you'll see crypto rise in addition to that. Because what investors are betting on is that the Fed won't have to be as aggressive. And if the Fed doesn't have to be as aggressive when it comes to raising interest rates, that means that growth stocks and traditionally more speculative stocks and crypto tend to rise. So what happened here was we had a CPI that happened on the 12th of January. It came in as expected, the 6.5% year-over-year gain that came in as expected. That wasn't a positive, it wasn't a negative, but it wasn't something that took away from the Bitcoin, from the expectations. And as a result, it also caused a pretty large rally in the Bitcoin price. So again, if we take a look at the January 12th, we're going to go back here and examine the price action. So January 12th, we can see that we've had some pretty significant, let me go to the daily, we've had some pretty significant action during this time. And that would put us at about a 5% move for that day. That right there was a major catalyst to push it above resistance here at 18,370. So that also was a huge catalyst for the Bitcoin rise. And the last catalyst I want to talk about is something that is also Bitcoin related or Bitcoin adjacent, and that is the NASDAQ. So the NASDAQ and Bitcoin have a relationship, and they do tend to be highly correlated together. Now, the NASDAQ year to date is up 7%, okay? Bitcoin year to date is up about 40%. Now, they are correlated, and Bitcoin does tend to go up higher than the NASDAQ does. But Bitcoin couldn't have made this move here without the NASDAQ also making a big move in addition. So if we go take a look at the NASDAQ chart here, we can see that the NASDAQ has also had a pretty massive move over the last couple of weeks. Okay, so those factors combined together produced this absolutely massive rally that we've seen over the last couple of days, over the last couple of weeks. And those are some of the factors that I'll be looking for in the future to kind of preempt another huge move to the upside. All right. So let me know what you guys think. Are there any other indicators that I've missed? Leave a comment below and let me know, and I'll be sure to catch you in the next video.